Okay, time for our fiscal focus segment, as always brought to you by InfoChoice, your choice of information on Australian consumer finance. Now, this week's topic is bond investing, which perhaps you've never really considered before, but with bond rates offering much higher rates of return lately, maybe it's time to start giving this asset class more of a go. So joining us to tell us more is Gabby Rosenberg, who's the co-founder of Australian investing app Blossom. Gabby, thanks for joining us on the Savings Tip Jar.
Thanks for having me. Really excited to be here.
Thanks for sharing your time with us, Gabby. So just the first question, super simple. How did Blossom come about? So we know that you're a young entrepreneur. So give us a bit of background and context as to how it came about and where it's gone since you've started it.
So COVID hit and we all got stuck at home, as we know. And my family found ourselves with a little bit of time on our hands. And we wanted to focus on getting on top of our personal finances. And my sister and myself, we co-founded the app together. And we come from a long lineage of finance professionals. So uncles and brother-in-laws and cousins and father, et cetera, et cetera. It goes on and on. And they're always bringing really innovative and interesting finance opportunities around the dinner table for discussion. So one week it was fixed income. And as a risk appetite personally, I'm super risk averse. So this was a really, really attractive opportunity for me. And we did some research around the opportunity and found that we were immediately priced out of the market. So long lockups, high minimums, high fees. And it was unfortunate because it was something attractive to us. It was something that we knew would be attractive to our friends and colleagues as well. And we wanted to find a way to open up access to this awesome market. And 2.5 years later, and we've done just that. And we now have almost 13,000 customers and almost 39 million in funds under management.
Wow.
That's amazing growth in such a short time. Now, obviously, Blossom primarily is involved with fixed income assets, so such as bonds. Is there a particular reason why you focus primarily on that asset class? And what's the go with bonds at the moment? Are they picking up in popularity, obviously, with rates being so much higher at the moment?
Yes, definitely. So the reason that we wanted to focus on bonds was because it was previously an asset class that's always been used by high net worth individuals. So as soon as there's market turmoil, you see the high net worth individuals liquidating their risky assets and taking this flight to safety, so to speak, to the fixed income market. So corporate bonds, government bonds, whatever basically tickles their fancy. And this was always an opportunity for high net worths, but it was something that excluded retail investors because of some of the reasons that I mentioned before. So high minimums, sometimes between $50,000 to $200,000 as a minimum investment, high fees for someone else to manage your money, and then in some investment opportunities, locking away your funds for 3, 6, 9, 12 months. And it's not something that's available to the everyday punter. So that's why we really wanted to tackle fixed income. There's also been this awesome wave of momentum in terms of democratizing access to a whole bunch of financial areas of the market. So you see people doing it for US equities, doing it for Aussie equities. Crypto has been a big one as well, but there isn't someone that's focusing solely on fixed income. And so we wanted to be the guys, or the gals actually, who are doing that.
I think the app kind of sits in this interesting zone where, like personally, I have a fair few friends that have used it as pretty much a savings account. So why would someone choose Blossom over a savings account? Because the savings accounts in Australia are backed by the deposit guarantee. So why would someone choose Blossom if they're shopping around for somewhere to put a bunch of money in their savings?
So it's a really valid question, and that's an important part about Blossom, that we don't have the government guarantee. And I guess comparing Blossom to a savings account might be comparing apples to oranges. But in terms of you having a pool of savings and then trying to look for different opportunities in terms of how to deploy that, we see customers at the moment using Blossom for, one, our high returns. So we have 5.7% per annum targeted returns. Two, which is a really bespoke and novel feature of the app, which is our daily earnings. So we actually post earnings to your account every single day. And due to the daily earnings, it really makes us popular for short to medium term savings goals. So we have lots of customers who want to hit specific deadlines, such as a house deposit or holidays or cars or weddings, or really time-bound financial goals. So currently our most common savings goal on the platform is a home deposit. And then further to that, we have $5 minimums. So really anyone can get started. We don't charge account fees. We take fees out of the fund. And finally, we have a whole host of really cool savings features and functionality, like auto recurring transfers, so you can set and forget, like roundups, so you can round up your spare change after you've bought a coffee or you've gotten into an Uber. And then the final one is our savings calculators, so they can help you choose your goal and then basically track it as you work towards meeting it.
Gabby, I guess with bonds, perhaps there was a bit of a stigma that it was always associated with maybe people are much older or much further along their investment journey and are perhaps a bit more in a defensive frame of mind, wanting to protect the assets they've established. But, when I look at the Blossom website, it looks like it's very much is catered for younger investors. Is that your typical user?
When we first launched, we had a average age of 31 years old, and we haven't strayed too far from that. And we're really seeing young people use the app for short to medium term savings goals, as I mentioned. And I think that bonds, they're really targeted by older people because generally it's the higher net worths using this really healthy market and asset class to build their savings. And it's just not something that the younger demographics have been able to access before. So we're really trying to change the dialogue. And we're trying to open up access to a younger investor. But in saying that as well, we did just roll out Blossom for Business and Blossom for Self-Managed Super Funds. And we're seeing the average age of those investors to be a little bit higher. And we've also seen an organically growing 55 plus demographic where they're saving for retirement or they're managing their super fund themselves or they're looking to purchase property for their children. And so we see quite a lower volume of customers, but higher average account balances there.
Can you just give a super consumer related bead on what's going on in the bond market right now? Why are yields so high, and what's going on in the market right now?
For sure. So given interest rates have been rapidly rising, the equity and property markets are looking very shaky. But the bond market is also facing real disruption as well. But with the bond market specifically, there's still a positive outlook. And I think it's a good place for investors to look into for their money right now. And the bond market disruption that we're seeing since all the interest rate hikes, it really benefits those holding high quality assets, because what it does is it provides more accurate pricing of assets, which means there's more opportunities to capitalize on higher overall yields, and therefore you can bolster your medium-term performance. So having said that, the bond market isn't homogenous, and you really need expert management to help you navigate the current market conditions. And I think through all the research since we've started the business, I really don't believe that the vast majority of investors have the knowledge or the experience, the skill, perhaps even the time to invest in bonds individually. So I would definitely encourage retail investors to look closely at the bond sector right now. But I wouldn't encourage anyone buying individual bonds on their own. And in terms of bond yields being really high at the moment, a couple of reasons for that. So one is that bonds do usually trade at an appropriate spread above the Reserve Bank rate. And that's just compensating for the opportunity cost of not holding cash. So if the cash rate's 4%, bond yields might be trading between 4.5% to 7%. The second reason is the perceived increase in risk of default. So if there's risk of default of the bond, investors need a higher yield, otherwise they won't agree to invest. And then the third one is the demand for bonds has dropped and liquidity has tightened. So as we know with any asset class, when there are fewer buyers and sellers, prices can drop. Investors can demand high yields to basically compensate for the increased risk of holding the less liquid bonds.
Yeah, it certainly seems like they're worth considering. I think I read just recently, actually, that the typical bond in Australia has actually surpassed the average dividend yield of ASX 200 stocks. So that's certainly something to keep in mind. Thank you so much for your time on the Savings Tip Jar, Gabby Rosenberg.
Thank you for having me. Really appreciate it.
Great. Thanks, Gabby.